Welcome to the Apartment Guys, where we dive deep into all things multifamily investing. Our mission is to educate, inspire, and empower real estate investors to reach their highest potential. Each week, host Tate Seamer interviews high-level guests from all over the industry who are sure to bring valuable, actionable ideas that will propel your career to the next level. Whether you're just starting out or a seasoned investor, you are in the right place. And now your host, the Apartment Guy, Tate Seamer.
Underwriting deals is such a major pain point for people. Most don't want to do it, and the people that are good at it are few and far between. That is why after 6 years of being in the industry and buying over 1,200 apartments, using my best-selling multifamily deal analyzer, I created Real Estate Lab, a full suite acquisition software for multifamily investors. We have built a product that helps investors automate their acquisitions and close more deals, all in a cloud-based platform. You can go to realestatelab.com and sign up today using the promo code TAG2 for 10% off your first 12 months. This is David Tupin. Thanks for listening.
Welcome, everybody, back. Another episode of the Apartment Guys podcast coming at you. And I am joined today by Dr. Jeff Anzalone, who is the first doctor that we've had on the show. So it'll be fun to talk to Dr. Jeff here. Jeff is a periodontist in Louisiana and is a passive investor and capital raiser in the multifamily space. And he can be found at debtfreedoctor.com. So debtfreedr.com is where you can find Jeff. Jeff, thanks for coming on the show. I'm really glad to have you.
Yeah, I appreciate you having me here and looking forward to our conversation together.
Yeah, for sure. So it's always good to talk capital raising and passive investing on the show. We deal with passive investors all the time at Greenlight, and we're always raising capital for one project or another. So this is a world that we're deeply immersed in here, and I'm excited to brainstorm with you and kind of learn from you and really add some value to our listeners that are in the space of multifamily in general, but especially in capital raising. So, Jeff, how long have you been in the real estate space?
I started roughly about 6 years ago.
6 years ago. Okay, yeah, cool. What was your inspiration for, I guess education, inspiration? What was that revelation moment for you that got you into the real estate space?
It was actually and you can appreciate this living in Utah. It was a minor snow skiing accident where I got off the lift, fell. You know, when you fall, you instinctively put your hands down.
Yep.
Wrist bent backwards, and luckily it wasn't anything major, but I think that was the catalyst that got me starting to think, well, what if I can't use my hands? What if I can't work? Everything was focused on the practice income provides everything.
Yep.
And one of my mentors early in life said the worst number in any category is one. You know, and you're relying on only one income, but I had no clue what to do. But then I started to do some research and that sort of thing, which eventually led me to start studying what millionaires do.
Yeah.
And as you know, that most invest in real estate and most have multiple streams of income, which I didn't have any of those. So that led me down to real estate investing, specifically passively.
Sure. Were there any books or podcasts or anything that was particularly influential on you at that point?
When I started reading and listening to podcasts and going to meetings, everybody talked about mindset. You've got to have a mindset. And I think the shift for me was reading two books, which probably most people have read, Rich Dad, Poor Dad, and then Cash Flow Quadrant.
Yep.
And the cash flow quadrant was really a wake-up call for me that even though I started off as an employee Then I opened my own practice. So I was self-employed. That's sort of what everybody wants to do. Hey, you want to be your own boss. But when you look at it from the cash flow quadrant perspective, you're really nothing more than a glorified employee, because you're trading time for money. You're paying all the taxes. At least as an employee, you can split the employment taxes, but the self-employment taxes, for me, I've got to pay all of that, Medicare and Social Security. So, but the thing is, the way I was making money, and that taught me it's more important how you make money. And then you could do it with other things, other assets, other businesses, where you're not having to be there to make money for you. So I think that was really a wake up call after I read that.
Mm-hmm, mm-hmm. Yeah. Rich Dad, Poor Dad has been such a massive influencer on people in this space, on the multifamily space. It really is, for listeners that haven't read it, I think it's fundamental reading material in this space. And it's all about setting up multiple streams of income, like Jeff said. And it's going to be very informative to you as to kind of the behaviors and patterns of the Poor Dad model, which is kind of, where Jeff was before, I guess, in terms of having a single stream of income that he was dependent on. And basically the gist is that the rich dads of the world acquire cash flowing assets and investments. And whether that's a business in a box, like an apartment building, which is really what an apartment building is a business in a box, or multi-level marketing. There's lots of different ways that you can set up streams of income. And that's really what that book's about. And I know that it's caused a lot of people to get into the industry. I think we're on episode 95 or 96 here on the podcast. And the book comes up all the time. So, and Cash Flow Quadrant, for those of you that are listening, is kind of a sister book to Rich Dad, Poor Dad, written by Robert Kiyosaki, the same author, and is really tremendous at getting into the nuts and bolts of setting yourself up for retirement and for abundance now, like through passive income and other residual income and other income streams. So, and personal note, my dad was a dentist. And so Dr. Jeff being in the dental field as a periodontist, I can relate. And my dad did not invest in multiple streams of income. So we were kind of always under the gun in terms of paying for our family, like paying for the things that it took to, be a family and vacations and stuff like that. We were kind of limited, and on a dentist income that a lot of people would kind of shake their heads or raise their eyebrow at that. But the reality is that had he invested in someone else's business, someone else's real estate deal, someone else's multi-level, whatever it was, like that could have been a complete difference maker for him and for us. And quite frankly, he could have retired earlier probably. And, he'd be in a different place than he is now. And he's in a great place now, but the Rich Dad, Poor Dad lessons for me were pretty profound. So, well, Jeff, I guess tell us a little bit about the last 6 years or so and kind of what you've done to invest, what you've done to kind of attack the multifamily investment space, and how you've gone about being a passive investor in different deals.
Well, after that snow skiing accident, that's when I started doing some self-education. And then, as I mentioned, I found that what the millionaires did, they invested in real estate and they had multiple streams of income. So I knew that I needed to invest in real estate to form multiple streams of income. But how do I do that? So I started networking pretty much everything was free, podcasts like this one, YouTube videos, blog articles. Then you start connecting with people that are doing it, and which led me to, at that time, crowdfunding online was starting to be real big.
Yeah.
So I started doing some patch of land. I was listening to Joe Fairless back then. So he was talking about, I think one of the sponsors of the show back then was like patchofland.com. And then you had like Realty Shares, things like that. So that's how I started, because I knew I wanted to be passive. And I would do, some little small deals, $1,000, a couple $1,000. And then I decided to do that was all debt deals. Then I decided to do my first equity deal online of Realty Shares. It was in Tulsa, Oklahoma.
Okay.
It was $50,000 minimum. Everything looked great. All the returns looked great. So I crossed my fingers. I wired my 50 grand in. And then after about 6 or 8 months, really nothing was happening. And then we started getting some emails that things weren't going as well as planned. Then after about a year, we found out that basically the sponsor ran out of money. He packed up. Nobody could get in touch with him. And after about 2 years, the website went under. Somebody took it over, and everybody lost their money.
Oh my goodness.
So that wasn't a lot of fun. But I don't remember who said it, but you never have failures. You're learning stuff. So I looked at it from that standpoint. So moving forward, I now during that time period, that's when I really started writing blog articles, because I wanted to tell people about what I was going on, so that didn't happen to them. But looking back, I had no business investing in that. I didn't know what I was doing. I was putting my trust in a website where anybody can put a picture up and put a number up that, hey, we'll give you this return. So you have to really know what's going on. And then for me, it was now the only way that I personally invest is find sponsors, like yourself, meet them, walk property with them, get to know them, get to know where they live. And they know that if things go wrong, I know where you live. And I'm not doing that in a mean way, but being from Louisiana, that's it's good to know that. It's good to know that there's some accountability, because on these crowdfunding sites, I don't know how it is now, you don't get that. You don't get to know who you're working with as much, or if at all. It may be different now. I don't know, but I don't invest in any of those types of sites. So the most important thing, because I've talked to people every day that want to get into this space, and they always are focused on the wrong things. Well, what's a good return, or what about this area of the country and this? And that's like you focus on the sponsor, you focus on the group. Just like if you break your arm or something, are you going to try to figure out how to fix your arm? No, you go to the expert that knows what they're doing, but you got to find that expert first.
Right.
And so for me, it took a while to start, finding those people. Joe Fairless, as I mentioned, was very instrumental back then. He got me started with the syndications. He introduced me a little bit to the idea of potentially working with groups to raise capital for them back then.
Yeah.
Getting the legal structure and everything together to where that would work. So during that time period, I was writing articles, what I thought somebody in my position, somebody that's making good money, paying a lot of taxes, wants to get into real estate, but doesn't really have a whole lot of time. What should they know before they wire their money in? And the blog really took off. The YouTube channel is doing well. And I just like to educate. I'm doing this because I like doing it. I still have my day job, but that's kind of how it all came to light.
Right. Got it. So you did what so many of us do in this space when we start growing and learning and have adversities and successes and whatnot. You started giving back in the way of a blog and it became an educator, really. And I love what you've done with your kind of niche, your branding, through debtfreedoctor.com. And by the way, listeners, check out debtfreedoctor.com, debtfreedr.com/free guide. And you can download Dr. Jeff's free guide to passive investing in real estate and benefit from his experience and his hard knocks and his successes and whatnot. I'd highly recommend that you do that. And the reality is, look, if you're in this space, even if you're just a deal finder and an operator, you need to know this stuff. You need to know how people think, how people passively and how people who passively invest, how they think. And you need to know the ins and outs of, the psychology behind that and the logistics behind it, because you're going to be invariably dealing with passive investors, whether you're dealing with a capital raiser like Jeff or others that are investing in people's deals, or dealing with an operator directly, or dealing with investors directly. Like, this is all really important stuff. This business is basically finding deals and finding dollars and putting them together and making deals work. And so the most highest impact work that you can do is really around finding deals and finding dollars. So, and you can specialize in one of those too, as most people do. And, Dr. Jeff's focused on the capital, and that's a great place to be in a deal. So you've really gone the passive route, and now you're a podcast guest. You're a blogger. What's your kind of day-to-day look like in terms of, let's just take the passive investing angle. How much time do you put into that? What kind of activity do you put into that at this point?
And the reason I know the hours is because I log them every week.
Okay.
I started filing for real estate professional status last year.
Yeah.
And I'm working anywhere from 20 to 25 plus hours a week.
Okay.
Outside of my practice. But a lot of it has to do with, I work on it before practice. I work on it sometimes during patients. We put a lot of them to sleep. So, in between them waking up and getting the other one back, so I can do, I've kind of have a system down. I don't treat patients on Fridays. So I work, typically on Fridays. I have a speaking engagement to a bunch of dentists in Mississippi this week. Then I have another one in Shreveport next week. So I do different speaking engagements. So that counts, toward, it's just education. And it really helps me because I'm continuing to refresh, talk about, and most of it's the basics, the basics of what a syndicate. Basically, I start off with, meeting them where they are, meeting somebody right now that all they've been taught by a financial advisor is you've got to invest until you're 65 or 70 years old in a 401k. And that's the only thing that you're taught. And that's what I did for the first 10, 11 years. And then it's like, well, what if I don't want to work that long? What if I want options? Mm-hmm. And then you start looking at it, trying to have access to your money that you've worked for. Then they start penalizing you and taxing you and charging fees just to get access to it before 59 and a half. I'm like, well, that's stupid.
Right.
So once I learned that there was another option, which I think that people should be given options and then let them choose, because what's right for me may not be right for you or somebody else, but at least you have an option. Do I want to go the route where I'm accumulating money and hopefully I don't run out of money, depending on what the stock, have to depend on like a stock market and all that,
right.
or
right.
Do I want to invest in paper assets or a real asset that I can ride by, like the buildings behind you, or if you have a building or self-storage or apartment or whatever in your area, you can go out and look at it, or you can look at it online or whatever. So again, giving people that option. And, most of the time, like for instance, when I go speak this week or next week, I'll I'll get them to raise their hand. Who's ever read Rich Dad Poor Dad or knows about the cash flow quadrant?
Hmm.
Typically out of 100 people, maybe 2 or 3 will raise their hand.
Wow.
Yeah. So it's good to start them thinking differently about how they're making money, and because somebody stood in front of the room one day and educated me the same way. So I'm just trying to give back to open people's eyes.
Right. And one quick side note, Jeff mentioned that he's working on becoming a full-time real estate professional or getting that status. The reason to do that is because you can enjoy tax benefits that you otherwise can't enjoy, mainly through depreciation, taking a loss on your taxes against your ordinary income. If you are a real estate professional, you are able to, and eligible to do that. If you're not, you can take the loss against your real estate income that's coming in passively, but you can't take it against the rest of your income. So that's what Jeff's up to there. And then as far as the educational piece, speaking at these groups, having people raise their hand and exposing them to this space of real estate investing through syndications into multifamily, that's such a service that you're doing for people. I hope you realize that, because you're introducing them to an option or options that could really be life-changing for them. And we really believe in the power of real estate here, obviously, and the power of passively investing. Quite frankly, when we go to set up our structure on a real estate deal, our passive investors are sitting in the best position in the deal. And that's largely due to the fact that they get paid first. They get a preferred return on their money. So if they invest $100,000 and they're getting a 7 or an 8% return on that annually, they get that throughout the investment, and they get that before any of the other investors, the active investors, get paid. And they also typically own the majority of the equity in the deal as well. And they're enjoying that position without any added responsibilities from the investment itself. So there's really nothing to do for them as far as, asset management, maintenance, working with the property managers, working with the banks, working with attorneys. Like, that's all taken care of by the active investors and by the sponsors, so to speak. And so it's really a wonderful vehicle to explore, and Jeff's out there educating about it. And I think that it's something that a lot of people would love to know about and love to have access to, but just simply haven't been exposed to it yet. So what are you finding, Jeff, when you are talking to folks? What first of all, are you mainly talking to like healthcare professionals or people in the dental field, or how are you typically meeting these folks?
2 different groups. Well, the ones right now that I'm giving actual live presentations to, going to offices and stuff, those are mainly dentists and other dental specialists or physicians. But I speak on the phone to people all the time on a daily basis that come through my website, that sign up for our passive investors group.
Mm-hmm.
And those are typically your high income, high tax paying professional. Could be an attorney, engineer, got some software, tech people. So it's kind of all over the place with those.
What do you find their major concerns are? Like, what are their pain points usually when you're talking to them? Like, what are their objectives and that sort of thing?
At first, it's real vague. It's more like, well, yeah, I've heard about this passive income. I just need some passive income, or I'm paying too much taxes. Studies show right now 50+% of doctors are facing burnout. So a lot of that is the burnout, which leads to wanting to retire early. Mm-hmm. So I think those are probably the 3 biggest things that I'm hearing from them.
Okay. So you've got a group of high earning professionals with a heavy tax burden usually, and they're burnt out on what they're doing. They're not loving their work. They're not loving their career, and they've got the ability through in their capital to deploy that in a vehicle like a multifamily investment or apartment investment to start to supplement or replace that income that they're making. Plus, they're going to get the tax advantages of investing in that asset as well. So you got cash flow, you've got equity growth, you got tax advantages, you've got risk mitigation, right? Like you've got the recession resistance of an apartment building asset, which, and real briefly, what I mean by that is that as in a recession, a typical Class B or Class C apartment is going to have an awful lot of demand because you got people downgrading from single family houses, selling their houses, potentially downgrading from Class A to Class B or C. And so the demand typically goes up often in a recession. And when you've got inflation like we do right now, rents go up. So you've got basically a hedge against inflation that is it's tremendously powerful. So there's just really lots of advantages to being a passive investor, and it's not overly complex. That's what I like about this space is like somebody like Jeff can go out, give a talk, present some ideas, present some simple concepts that are very graspable by almost everybody, and all of a sudden then they know something, they have a vehicle to invest in, and they're off and running in a brand new investing field. So it's super exciting, and I love what you're doing. I appreciate that you're out there educating people on this and presenting them with opportunities. So at this point, you are investing in basically other sponsors' deals with you're bringing in passive investors. Do you have a fund, or are you just doing a deal by deal sort of thing? How's that work?
Yeah, just doing it deal by deal right now. I may in the future do a fund, because sometimes these sponsors will, I know when other people work with them, they'll allow them special perks, maybe a little bit more. Maybe they'll lower the minimum investment to get in, like let's say from 100 to 50,000, or maybe they'll give them a little bit more preferred return, different perks like that. Now, not all of them do it, but sometimes they do. But right now, it's just deal by deal basis.
Okay, cool. Well, I'll just throw this in there. We'd love to talk to you when you're ready at some point in the future about potentially partnering with Greenlight. We work with capital raisers a lot. We're really a deal finding machine, and we do raise capital directly from investors, and we almost always have slots for funds or capital raisers to come in and participate. So I'll just plant that seed there, Jeff.
Sure. Hey, thanks for appreciate that.
Yeah, we'd love to talk to you. So what does the future look like for you in terms of moving forward from here? Do you have retirement on your radar from periodontal work, or do you have goals for the real estate gig? Like what are you thinking there?
Yeah, right now I'm 47, and I'm pretty laser focused on replacing my income with passive income from syndications. And because everybody that I talk to that retires, or at least around here, they're 70, 75. There's some people here that are like in their 80s still practicing. I'm like, wow, no, thank you. Right. But all of them pretty much say the same thing. What else am I going to do? So I'm really thankful that I've got something that I'm going to retire to, because I want to do the educational piece full time. It doesn't feel like work to me. I mean, I can get here at 7 a.m, look up, it's 3 o'clock in the afternoon, and it doesn't feel like I'm working. It's just, it's fun doing it. I like producing the content. I like making connections with people such as yourself and investors, and
Yeah.
trying to, I mean, because and I tell my kids this, they're teenagers, I really want to instill them to be an entrepreneur, because entrepreneurs are nothing more than problem solvers. We
That's
help
right.
people solve their problems.
That's right.
There's a lot of problems out there with these people in not only in the healthcare profession, but think about the cycle. If you're a professional, typically you've gone to school longer than other people, so more than likely you have debt,
Yeah.
student loan debt. You've got this sunk cost of the debt. You've got all the education. I spent after high school for like 12 years after high school. So when you're in that position, you've spent all this time, energy, and money, you feel like you're stuck.
Mm-hmm.
You're stuck in this rat race, basically, which is like Kiyosaki's cash flow connection game or whatever it is. The idea is to get out of the rat race as soon as possible.
Yeah.
So helping people realize they're in the rat race, even though they've have a lot of time and money put in, there are other things that you can do with that. But if all you do is work, then you'll get to the point you're 70 years old and go, well, what else am I going to do? It's because you've worked your whole life and you haven't lived life.
Yeah.
I'm trying to tell people there are different ways, and opening their eyes to that.
So good. So smart and generous. Like, you're making an impact and making a difference in people's lives. And that's tremendous. Cool. So what about goals? Do you have a retirement age in mind?
I would like to be able to transition out. Like I said, I'm 47 in 5 years or less.
Okay. Yeah,
And
that should be very doable. I would think.
Yeah, the sooner the better. But if it doesn't happen, well, at least I've got a goal to. If it's 6 years, well, it's better than another 20 years.
That's right. And if you didn't have the 5-year goal, you might not have made it at 6, right? Like,
right.
That's a beautiful thing about goals. If they're set well, if you miss your goal by 10% or even 30 or 40%, you're still ahead of where you would have been if you hadn't been shooting for that. So, failing to meet a goal is just like any other quote unquote failure in my book, which is it's a step forward. Like ultimately, if you look at every setback or set of adversities or failures, that they really truly are like a step on your path. And the more that we resist the failures and make ourselves wrong for them and make other people or whatever wrong, like you could have easily just gone off on that sponsor that kind of screwed you over and left that deal. And instead what you did was you could have quit right there. Like probably a lot of people would have, like, oh, you can't trust people in this field. You're set up for failure. People can leave. But instead you kind of doubled down and were able to proceed with your career. And you use that not only as a stepping stone, but you used it kind of as a launching pad, so that you can help people avoid what you got into, avoid making that, that mistake or that series of mistakes or however you look at it. But at the same time, you use that to propel yourself forward. I think there's a big takeaway there for listeners that try something new and maybe it doesn't work out like you thought it would, but instead of disengaging from it, if you double down, use the lessons, use the gain knowledge, the hard-earned knowledge from the quote unquote failure, that can be one of the keys to your success. So I give you a lot of kudos for how you've been able to make all that happen.
Appreciate it. Thank you.
Yeah, you bet. Awesome. So tell us a little bit about what's in the free guide that people can download.
Well, it's more like I'd mentioned, it's meeting them where they are right now. It's talking about the different options. Do you want to do the 401k accumulation method, or do you want to invest for cash flow to replace your income now?
Mm-hmm.
Some of the tax benefits, and then some of the ways that people, mainly people just getting started out, some of the steps they can take that I took. And all I do is just basically everything that I write about or talk about is just from my experience. What
Sure.
have I done when I started off? Here are the steps to take, because, kind of like when I started my blog, it was like, well, I don't know how to start a blog. What do I do? And I found somebody that did that. They said, here's the steps you take to get started. This is how they did it. So I was just doing the same thing, but talking about real estate.
Mm-hmm. Mm-hmm. Yeah, that's awesome. Cool. So is that the best way for people to reach you? Is it through the website debtfreedoctor.com?
Yeah, that. And then on the site, there's a YouTube, which I'm hearing from people, they like the YouTube videos more. I'm more of a YouTuber now. That I used to listen to a lot of podcasts, but now I've gotten into YouTube because, you can, at least with a podcast, at least you can hear somebody. To me, that's a better connection than an article. But when you can see them as well, you kind of get a better connection. So either the blog or the YouTube channel.
Sure. Okay, great. Well, so listeners, make sure that you check out Dr. Jeff Anzalone's debtfreedoctor.com. Check out his YouTube channel. And if you have questions about passive investing, you want to pursue passive investing, he's available to talk to you. I certainly am as well. And we're both more than happy to share with you what we know and hopefully get you going on a good path in the passive investing world. So Jeff, thank you so much for coming on the show and sharing your knowledge and wisdom with us. We really appreciate it. I think you added a lot of value to the listener base here.
Thanks for having me, Tate.
Yeah, you bet. And listeners, thank you for listening to another episode of The Apartment Guys. If you enjoyed what you heard, we always love a rating and review on Apple Podcasts. That's very, very helpful to us and helps us know that we're doing something right, hopefully. And I mention this every podcast, but you can go to investwithgreenlight.com if you'd like to brainstorm your business and kind of do some informal coaching and consulting with me. It's totally free, no strings attached, nothing expected. You can go to investwithgreenlight.com and book an appointment there. So, and I'll just remind you, look, if you're listening to these and you're listening to the end, which you have at this point, and you're really taking them in, like you're doing a lot of the things that Jeff and I did when we first got started, and you're self-educating, you're using us as digital mentors, and that's tremendous. You're doing the right things. Like, give yourself a pat on the back for doing the right things and for investing in yourself, because it will pay off, I promise. So with that, listeners, thank you again, and we'll check you on the next one. Take care, everybody.
Thanks for listening to The Apartment Guys with Tate Seamer. Tate and friends are grateful to have you as a loyal listener. If you like what you've heard, please subscribe, rate, review, and share with friends on your Apple Podcasts, Google Play, Spotify, or any other podcast platform. Also, check out Tate's YouTube channel for videos of many of these episodes and more. Until next time, take massive action steps and rock on.